Many of us lost a lot of money when the S&P 500 had the worst half-year performance in more than half a century this year. Through mid-October, the S&P is down 24% year-to-date and firmly in bear market territory. Hey, it's Will from Paxis Trading. Being able to bounce back from a loss is crucial to being successful in this game because it's going to happen no matter how good you think you are. You are absolutely going to have losses. It happens to every single investor and trader, including billionaires. However, the way to win in the stock market over the long term is to be able to recover from a huge loss. In this video, we're going to talk about the 3 steps you should take to recover from a large stock market loss. But before we start, please hit like and subscribe so that more people can benefit from the educational content I put out. Let's get into the 3 steps to recover from a huge loss. The first thing you need to do is to accept the loss. Losing is part of trading and investing. In fact, in the stock market, you are going to lose far more times than you win. Remember what I said in my other videos. 90% of people are not profitable. I personally have not seen anyone with a 100% win rate. My best public record is only 86%. If someone tells you he's always right and he knows exactly what's going to happen in the stock market, blah blah blah, that person is trying to scam you. It is important to understand losses are not going to go away when you're trading or investing. Now, what do I mean by accepting your loss? If the macro environment, the business fundamentals of that company have changed, or the stock has broken below certain key technical levels, you should accept the loss and cut the stock. Do not back hold and hope that the stock will eventually go up sometime in the future. Usually, your chances of losing much more are much higher. If you want to learn more about basic stock analysis, check out my other videos. They are very beginner friendly. The next step is that you need to take a break to clear your head. Even though you might be very tempted to start trading again right after, you should wait while you figure out what went wrong. I've seen so many people trade even more aggressively out of rage or desperation trying to get that money back. I did that too 12 years ago. I was doing really well with Zynga, then it crashed. I lost a ton of money. I felt extremely salty. How could that happen to me? And started trading Zynga non-stop trying to get my money back. Did I ever make it back? Of course I did not. I blew my 6-figure account. After that, I put my grad school student loan money in it. And I blew that too. I'm telling you, that's the worst thing you could do to your capital. The next thing you know, your trading account is completely wiped out. If you trade options, that will happen faster than you can ever react to it. You would be better off giving that money to some charity or something. So at this point, just let it go. Give yourself some time and space and get that salty emotion out of the way. When you have a clear head, you will be ready to move on to the next step. The last step, improve your trading process. After a big loss, you need to look at your trading process again, because with the right process, a huge loss should not even happen in the first place. Take a piece of paper, write down what happened, how it happened, and why it happened. Did you size too big? Did you buy at the wrong spot? Did you misunderstand the business fundamentals of that company? Or did you hold on to losers way longer than you should have? If you are struggling to figure that out, reach out to experienced trader for help. Most professional traders like myself can easily point you to the right directions based on our own experience. Please do not go to a trader and ask, "Hey Will, can you just trade with my money? I would be more than happy to have a chat with you. But no, I'm not going to touch your money." You should make your own trading or investing decisions. You might want to make changes to your existing way of trading or come up with a new process. Some key components of your trading process should be what kind of stocks you trade, in what scenario you would buy the stocks, how you set your stop loss, and how you lock in profits. Practice that new process with a much smaller position size, maybe 50% less than what you usually put in a trade, or 70% less if you want to be conservative. Your goal is not to make real money from the smaller size. Your goal should be to validate your new process. You need to have success for at least a few months before you consider increasing your investment size. Losing money sucks. No one likes it. I've been there, so I understand. But you can't change what has already happened. You have to move on and focus on your next trade or investment. Investing is not a sprint, it's a marathon. Your long-term success is not defined by 1 or 2 losses unless you let it be. Don't give up so easily. There are a lot more things involved in building a successful trading strategy. So make sure you check out my other videos. If you like this type of content, please hit like and subscribe so that more people can get useful tips on stock trading and investing. Leave your thoughts in the comments below. See you next time.